Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Right, we are getting the numbers here for the jobless claims. Initial jobless claims lower than expected at 221 versus the expected 233 and lower than the previous reading of 242. Continued jobless claims continues to climb and is higher than expected at 1.897 versus an expected 1.873. So I think what you're going to see here from this eventually is, well, probably this month you will see the non-farms jobs number will continue to be really low, right? Morning, Uzi. Such thin books. Well, I mean, it's thin because of the jobless claims first, but, you know, it seems to me like that the markets are kind of still on edge. Yeah. You've been on my terminal. Why are you up so early? Man, that's so early. Okay, well, let's first things first. Let's come to the charts. Where is it? Here we are. ZN. Okay, so for the past 2 days, we've been getting some downside action, but this morning in the treasuries, we are kind of pushing up. Again, I'm not entirely sure what some of this was. I think some of this was hope that they will get a trade deal, things like that. And I think some of it is the whole German debt break thing. Basically, they're saying that like Germans are giving up fiscal responsibility. And that has kind of pushed the bonds down. And you're seeing like the overall bond market selling as a result. Over here in the S&P 500, they had a bit of a rally yesterday, but they're giving it up in the morning hours here. Oil continues to plunge. In fact, that's a pretty aggressive down move we had yesterday in oil. Gold is doing okay. Silver's actually looking good relative to gold this time. And copper had a good jump yesterday, but just kind of like maintaining the gains there. The dollar, though, the dollar has really been the big story, I think. The dollar all the way down at 104. So from 107 to 104, that's pretty big, man. That's pretty big. And the Bitcoin, back and forth. They're sitting around at 90K. My diabetic dog has my schedule. Whoa, really? You have to wake up at... Well, I guess your time it's like 5 o'clock, so I gotcha. You know, jobless claims, there was some movement on jobless claims. There is some interesting things in jobless claims, but it's just not as big as I thought maybe it would be, you know? Only an hour earlier than usual, but I gotta make sure he eats at a certain, yeah. Well, now you You wake up the same time as I do, you know, time zone adjusted, of course. Except for you probably can go to bed whenever you want, and I usually have to deal with the children that for some reason do everything they can to never go to sleep on time. I woke up at like 2 o'clock. Nobody in the room. My wife was still downstairs watching TV with Asher, trying to get him to go to sleep. I find the job market depressing, guys. I saw this thread on Reddit yesterday. This person was like, well, we do not have the labor force to create the kind of economy that Donald Trump wants to create. We're already at full employment. So where are we going to get all of these people that are going to do manufacturing jobs and things like that? And I didn't comment, but it just like, I mean, he had said, this guy has said all these things about like how great employment is right now and all of these things. It's like, you don't understand, man. You are unemployed in this economy. You live in a special kind of hell because there are no jobs, nobody's hiring, and nobody believes you because to everybody else, it's like, oh, everything's going great. Yeah, it's the same place we're going to get all those people to do all the software engineering jobs out of thin air. Well, I think the thing is I think that there are plenty of people out there that are, what is the word? Unhappy with their jobs, right? And would like to move up. Like there are just a lot of people that are just in really crappy service jobs. One of the things this guy was citing as evidence was that they had this role out there, a technical role, and they had been looking for a year and couldn't find anybody. And they have like a $5,000 bounty on it. Like, and whoever refers, you get $5,000, right? And I'm sitting there and I'm like, I 100% guarantee the problem is that your HR team has no fucking clue what it's doing. Because there is not a technical role, like a computer software role out here in this economy that I can't do. So if you can't find somebody for the role and it's remote, yeah, I guess that'd be the other thing. It's if you can't find a technical person for a role and it's remote, you're doing something wrong. Because otherwise you'd be hiring me. So it's just, and the thing is that these continuing jobless claims just continue to go up. And I'm telling you, at some point, enough people get stuck in that in that continuing jobless claims trap that the whole thing just collapses. If you don't bring interest rates down, because the issue is like, okay, nobody's hiring, and what do you do when nobody's hiring? You go and you start your own business, I guess, but the conditions are such that it is very difficult to start your own business right now. By the way, Uzi, your comment on my video yesterday, because we said, well, we need to flood the world with content. So I said, I need to try and put out at least 4 videos. I need to at least put out 4 videos. Well, so I put out 4 TikToks. It looks like they all pretty much stayed mostly in TikTok jail, which is to say that they get about 300 to 400 views. I actually got more engagement on these posts than I usually do. Maybe because some of this was political. What should I do today? Well, we can talk about the jobless claims for sure. Anytime that there's an economic number, I should probably say something. I don't know what else. I can make a video about how annoying it is when people post backtests with the sample size too small. Anyways, I come back over here to YouTube. Oh, couple of notifications. Oh. I tell you what, it really pisses me off when I go to see like, oh, there's a comment. And it's obvious spam. Spam or misleading. Hide user on this channel. Okay. Okay, so then here's the YouTube sign of things. And like, look at this. The first one got 124 views. Then the next one 43, then the next one 81, and then this one 551. Yeah, I like how you had the fair value gap monitor in the background on one of your videos. Yeah. But anyways, so when I posted the first one about fair value gaps and why they're useless, and Uzi commented on it because I'm pretty sure it was because Uzi was thinking, no, Seth, the whole point was to talk nice about the fair value gap and to get all of those people that like the fair value gap to follow you. You screwed it up, Seth. And I was like, yeah, that was the point, but I just can't get myself to do it, man. And I need to do some more math, but I think that the good news is that we only have to generate like $500 to $1,000 to make up the shortfall in my budget. So did you mean that free ladder for Ninja? Well, I wasn't saying anything about it, but we did bring that up yesterday, and I was saying, like, there is a ladder actually out there. Yeah. There's one. I think there's more than one, actually. Oh, this is different. Okay, so there is one thing is that there's a lot of custom DOM column things that you can add into their thing. But I've seen people that they created a whole new component, because the big problem with the Ninja Trader's DOM is all this white wasted space, right? So somebody has made one that doesn't waste the space. Is your Ninja updating normally? Yep. But you know what? I'm using a different data feed than you probably are if you're using Ninja Trader Brokerage, so. Yep, CQG. Well, you're probably using CQG Continuum, right? Because I think that that's all that Ninja Trader Brokerage offers right now. Uh-oh. Yeah. There was this one job that I interviewed for that I thought went really well. I thought there was a high probability of me getting an offer from them. And I did last night get the thank you, but we're moving on. Do I have on here? Yeah, let's update our documents. You were shadow banned again? I'm sorry. You know where I don't know where to find the other Ninja Trader Dom thing, but I'm just saying it's out there. There's more than one. Because they're not doing a good job. How many have I done? I mean, there's something wrong, man. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. No, man. On YouTube? On a YouTube comment or just here? And if it was just here, why were you posting that? That didn't have anything to do with anything. Man, I really thought that if anything was gonna be it was gonna be that one. And I've been having a hard time the past few days because starting to realize that, like, they probably should have contacted me by now. But now, like, knowing for sure just is really crushing. Comment on Musk's interview. Yeah, okay. Saw this thing yesterday that, like, China is concerned that if Trump and Russia are able to make a deal on the Ukraine thing, that Russia could then turn around and start to push back against China's expansion, and that the US and Russia would stand against Chinese ambitions. I thought that was really interesting, that that's what's going on over there in their heads. Oh, I forgot to start our strategy. You guys got to remind me to do that. Zero Hedge saying it looks like mass government layoffs hit New York this week in the jobless claims. I don't know if that's in the jobless claims, then the jobless claims were like unusually low. That's kind of well. Let's go read about it. Despite let me drink some water. Despite strong employment indications from the U.S. PMI subcomponents, ADP was a disappointment yesterday, and this morning saw global outplacement and business and executive coaching firm Challenger, Gray & Christmas report that U.S.-based employers announced 172,017 job cuts in February, the highest total for the month since 2009. Okay. Because I'm seeing all these people saying, oh, layoffs are like at Lowe's. Okay. Private companies announced plans to shed thousands of jobs last month, particularly in retail and technology, with the impact of the Department of Government efficiency actions as well as canceled government contracts, fear of trade wars, and bankruptcies. Job cuts soared in February, said Andrew Challenger. Government led all sectors in job cuts in February. Challenger tracked 62,242 announced job cuts by the federal government from 17 different agencies last month. So far this year, the government has cut 62,000, an increase of 43,000 from the 151 cuts announced through February. Retailers joined with 38,000 job cuts. This is a 572% increase. Is this even about the non-farms? Oh, here, they are going to talk about jobless claims. Okay. So far this year, the East region has experienced a steep increase in job cuts, primarily due to the cuts recorded for federal agencies. The East experienced a 109% year-over-year increase. The District of Columbia saw the largest increase, from 60 in 2024 to 61,000 in 2025. In fact, Challenger and Gray Christmas report that Dodge Impact leads job cut reasons this year and was attributed to 63,000 layoffs, both directly to the federal workforce and to contractors, none of which should be a surprise. But when we look at the government-supplied data, things look a little different. The number of Americans filing for jobless benefits for the first time slowed last week. Adding to that peculiarity, jobless claims in D.C. area fell last week. But New York saw initial jobless claims explode higher. Continuing jobless claims rose back up near 1.9 million Americans. Given the number of lawsuits desperately trying to slow/delay the firing of government workers, we would expect to see the number of initial claims in D.C. and therefore the nation accelerate further in coming weeks as judges are forced to allow Trump and Musk to do what we, the people, ask them to do. I feel like crying to ChatGPT. I thought I read yesterday that Germany is actually talking about reducing military spending. Well, the whole thing was that they are like adjusting their debt break rules and everything so that they can essentially take on more debt. Because they want, because they're expecting that Europe is going to have to spend more money on defense. Because they can't necessarily trust the United States to foot the bill for them. I'm hearing a lot of comments. Fed's Harker is speaking right now too, so not any super strong reactions in the Treasury, so. These markets have been difficult lately. You know, I think that in many of the cases here over the past week or two that I've just kind of been tuned out. And I would expect these markets to be ones really difficult for people to trade. Like this is a time when I expect to see lots of retail traders stopping at or like blowing their accounts and coming in and complaining about that their strategies that worked for a long time aren't working anymore. Because for one thing, I've found that the majority of retail traders that are doing well, they do well because they have a strategy that for one reason or another is biased towards taking longs in ES, right? And or they have some, you know, it just falls apart when volatility gets too high. Gold has been predictable. Well, gold has actually given a couple of pretty good trends, hasn't it? So like even here in the treasuries, you know, there's been a couple of situations where it's like, you know, there was really strong, like yesterday, man. Yesterday, really strong impulses on the buy side, like order flow that just looked incredibly strong. And then after that died down, things completely flipped and they sold. And, you know, if you were in any kind of a long and eating that, I think that you would be extremely perplexed as to why it played out that way, you know? Market's easy if you take it in a demo account. Well, I do kind of need to take a live trade here soon, don't I? But I haven't even taken demo trades. It's just like my subconscious knows that this is like terrible action and just avoids trading it altogether. There was that one yesterday, but that was kind of like not very serious, right? Having trouble breaking above 08. Well, generally I'm seeing selling across the curve, so. When you lose, you ignore it, and when you win, you think you're a super trader. Not quite. So generally speaking, people will feel the losses more. People will feel the losses more. But what you do is you forget them. You don't ignore it. Like, you make your body... I mean, people are just really adverse to loss, right? At the moment, the Treasury complex is giving me really strong signs of don't touch this. Okay, so why do I think that? So first of all, liquidity is relatively light for the first several prices. So when liquidity is really that low, like it's below 2,000, that's usually a really strong indication that I maybe don't want to touch it. Then when I come and I look at things like cumulative delta, well, what has the 10-year been doing here? I'm actually seeing some net buying. I'm actually seeing some net buying here in this location, but like there's an iceberg at 23. But I don't really see a lot of correlation between the price and the cumulative delta right now. And if anything, it's a net sell, but like it's like super iffy, right? So that's a big sign to not sell, or to not take a trade. And then I come in and I look at across the curve. I'm seeing similar sort of thing in ZB, but I am seeing a pretty persistent sell over in ZF. Now the problem with that one is that it was like a huge buy followed by a huge sell. So also, you're seeing the spread over here between the cost basis between the buyers and sellers in ZF is widening. You see that right there? Widening. Now, curiously enough, I am seeing like some spread trades, like a flattener coming through. So I suppose that there maybe is a good trade on a flattener. But in terms of the outrights, every signal that I'm getting is don't touch it. And then I guess the other side of it is when you look at the S&P 500, that looks incredibly wishy-washy over there too. Mark Douglas, meh. Instructs traders not to view trades as connected. Every trade is new. So, let me tell you something. When you're reading these, like the most popular books, and Mark Douglas should be included in this, you need to always keep this piece of context in mind. They're talking about momentum portfolio strategies. Okay. They're talking about momentum portfolio strategies. And in a momentum portfolio, you are going to be very tempted to think, well, this particular trade is doing poorly and this particular trade is doing poorly, and maybe they're connected. But if you've constructed your portfolio correctly, your positions should be as uncorrelated as possible. And you really kind of have to ignore that sort of stuff and get into the plays and size your positions the way that your system says to. So that's why he's saying that. For us, scalping, I mean, are the trades connected? You're only in one trade at a time anyways, usually, right? Do you have a piece of information that predicts what the future orders are going to be? If no, no trade. I guess we do have one piece of information, which is that we're coming into that inventory cost basis for the buyer's side. So you're likely to see a little bit of a bounce. We did move up like, what, 2 ticks now? Good morning. How are things? I'm feeling pretty down today, to be honest with you. I need a job, and I'm starting to think that the only way I'm going to get a job is if there's a complete collapse of the economy and we live through hell for a year. Or I find some way to do it myself. Started service, but you have to be more specific. What kind of a service business? So, you know what's one thing that I think about a lot lately that like kind of grates on me? Is that when I was younger, I remember having lots of ideas. There was always some business that I wanted to start. I think back then that those could have been decent businesses, but ultimately they weren't big enough, because what happened was Facebook came along and just plowed through everything else on the web. Like Facebook and Amazon took over everything, right? And so all of the ideas that I had kind of went away. And then I went to the market. You know, I got interested in the market. So one thing is I kind of don't like that I don't have those kinds of ideas anymore. It's like I feel like that, like all of the good opportunities have been taken or something. But then even if I did have a good idea, like I think that building our own trading platform is a good idea. How do you get the money to do it, and how do you promote it? Right? Like, I believe that the indicators that we provide here, that I sell on my website at speculatorseth.com, are the best that there is. And I'm showing you data that you can't get anywhere else. I think that the inventory cost basis, especially if you're trading treasuries, is just like invaluable. And I mean, we get okay sales, but it's not enough to live on. It's not enough to live on. Ultimately, you also have to be able to promote it. And for some reason, I don't seem to have that ability. So even if I had a good business idea, everything that I know right now kind of suggests to me that it wouldn't work because I wouldn't be able to get customers. Wouldn't be able to promote it enough to get customers. Like, I can imagine spending millions of dollars going into debt to develop my own trading platform and then nobody wanting to use it. As, I'm going to use a free platform. I don't think I ever realized because I've paid for software. We're doing order flow and things like that, and so most of you guys, you understand that and you can understand the value in it. You understand the value in having a news squawk, but we're in a little tiny bubble here in respect to that. The vast, like 99% of retail traders are doing everything they can to avoid having to actually spend any money on anything so that all of the money can be into their account so that they can gamble, right? There's definitely money out there in tools. It's just kind of like an uphill battle, and the ones that have been successful, I don't know how they've done it. They have some sort of marketing magic that I don't. Nine inches overnight. Oh gosh, where was it? Hold on. Oh, here we are. It's interesting that they kind of came up 2 ticks and now they're down 2 ticks, but the bar on the down 2 ticks looks so much bigger. But I'm not seeing delta on it, so I'm still seeing don't touch it. In fact, I'm actually seeing some buying in ZF, which is kind of weird. Yeah, I'm like it's getting worse basically. For some reason, that kind of makes you want to start trying to make bets, but I really don't think that I have anything to help it predict where it's going to go. Do we have... Let's make sure that I've got all of my I's dotted and my T's crossed. I had Harker speaking, Man will speak. It's IVPMI today. Wholesale sales at top of the hour. 4-week bill auction. I suppose wholesale inventories is not inconsequential. But I do think that this action they were seeing is probably random. Good uptick. It's a good thing that it snowed last night and I'm going to go skiing today, because the thought of having to continue through this process again for more months is just soul crushing. Man, even in ES, Alice is only showing me 2,500. That's not good. They'll probably pick over there once they open, though. Man, look at how quickly they come back there. This is definitely market maker shenanigans. Market maker shenanigans in a market with a wider spread than usual. Probably if it does break out, we're gonna be like, oh, I wish we had caught that, but I really don't see a lot of opportunity here. I've never even been on a mountain. Yeah, it's actually kind of interesting to me to find out how few people actually ski, because when you're up there on the mountain, it sure doesn't feel like that people don't, most people don't ski. When you're up there on the mountain, it feels like, man, where do all these people come from? I bet you that today, because it's we had 9 inches overnight. I think we're expected to get more today. So it's a midweek powder day. That is going to be better than on the weekend, but I bet you there's going to be a line when I get up there. You've never seen the ocean? I think that if I didn't live in the mountains, that I would enjoy living in near the ocean. I don't know. The thought, I wouldn't want a house like on the beach, because I think that the sound of the ocean all the time would probably like get on my nerves after a while, you know? But I do feel like that my aesthetic is more beach. I'm gonna recenter here. That move that I was kind of seeing in the yield curve has kind of halted as well, so that's a lot of, well, up in the mountains. Here in the valley, it didn't snow at all. At least I don't think it did. If it did, it didn't stick. I've been seeing all of this stuff that apparently luxury brands have have decided that skiing is an aesthetic that they want in on, and so they've been creating all of these ski-based pop-ups and things like that, which is so hilarious because when you go up onto the mountain, nobody would be caught dead wearing stuff like that. Like, they want the most utilitarian kit possible and nothing that really stands out. If you have anything that makes you stand out, people immediately start to make fun of it. Because if it was something that makes you stand out, then that probably means that it's not actually quality gear. You get what I mean? Like they want the utility. They want the utility. It's going to keep you warm and everything, and those things are going to be popular. Ergo, because it's already like $1,000. Your preference, Burton or Montec? Oh no, Montec is hated. Montec is hated because it's cheap, low quality stuff. Montec is. Burton has kind of lost some of its prestige as well, but they're okay, I guess. I still see their snowboard pants a lot, but not much of the other stuff. It's kind of funny because I remember Burton being like the snowboard brand, and now I don't see very many people getting their snowboards. It's all LibTech and Capita. Remember when Supreme sold a crowbar for hundreds of dollars? Well, it's still for sale. And they had a brick, right? And they had a t-shirt that just says Super. That one is just so dumb. I would very much like to buy more ski gear. I want new gloves. I want I want a board because I have a rental board right now. Want a new backpack that's a little bit more purpose-built for skiing. Okay, now the move up is getting a little bit more significant. I'd say it's still within the range, but it did tick up there pretty quick. Not enough to show like a real change in cumulative delta on the chart, but it was there on the DOM. They traded through, about 1,000 contracts each step. Why not build a snowboard? Oh, I don't know. Maybe I could do that. I mean, I would need materials, and I'm not going to spend any money on materials right now. I have this cabinet out in the garage that's been sitting out there now for 9 months, and basically just needs to be painted and stuff. But I need to get the nice painter to paint it and everything. It's so if we really do get into this dystopian future where like all tech jobs disappear and it's only like a small set of elites that do all of the tech, and the rest of it is done by AI, and we move into more manual labor jobs again, which I'm really don't think that it's going to turn out that way. That doesn't really make a whole lot of sense to me, and I think the only reason that people say it is like it's an envy sort of thing, right? Like there's a lot of people that are envious of the people that made so much money in the tech industry, and so they want those people that had that success to have their comeuppance, right? But if we did go into that, I think that I would be in woodworking. That's the family history. Watched your video on price action, but I think it's wrong because you can't code a program to backtest it, because what makes it work is discretion. Okay, so this is a kind of a bizarre argument, I think, Red Zone. So here's my argument to that, my response to that. Okay, so if A equals 0, which is to say that the very specific, is it the same guy? Probably it is. If this very specific price action setup on its own, we backtest it, it doesn't result in an edge. Okay. And then B equals 1, which is to say there's some sort of discretion involved, right? Then A plus B equals 1. So why do I even need A at that point? If A plus B equals 1, what makes us think that A has anything to do with it? Now there's this other one, which is actually B is the discretion on its own is not good enough either. And somehow A plus B equals, so A equals 0 and B equals 0, and somehow A plus B equals 1? How is that? I've never seen that before. Actually, what I see is actually, this is more realistic. A equals 0.1, B equals 0.23, C equals 0.1 as well, right? And you have this all the way D, E, F, right? And you add all of these together, and then all of those things are equal to 1. And you got something, you've got a profitable strategy, right? Like that's more likely, right? But when we go and we test like these price action strategies, I don't get 0.1, I get 0. I get that the results are random. And so I think that the only reason that anybody believes that any of these strategies have any efficacy is because they aren't sophisticated enough to be able to differentiate between completely random action and a real edge. And it's really easy to see why that would be so widespread once you start to like set up back tests that are truly random, right? If you go and you do a strategy that is just pure random, it's completely based on a random number generator. You run that 1,000 times for a year. So over 250 trades, right? Over 250 trades, 40% will be profitable by the end of it. 40%. Right? And all of those people that got, you know, even if it wasn't very much, all of those ones that they came back 40% that were profitable, they all think that whatever it was that they were doing worked when the strategy was a random number generator. I could give you the strategy, right? Not tell it, you know, put it in a DNL, not tell anybody what it was. Tell everybody, hey, I passed this combine with it. You go, you go and try it. And I bet you that after a year, there would still be this huge contingent of people that claimed that the strategy works. And then I would reveal to them that it was random. There's a 1 lot print on the, okay. I don't think that's another thing that I don't know if there's really any. It is kind of weird that it goes from 2000 to 1, but we had like a huge impulse. They went all the way up to 30. Did they get? They did. They got all the way up to the top there, and then they've come completely back just as quick. So I've like once again, I've read that this is too slippery of a market to touch. No, I don't. I think I understood Red Zone's point completely because it's just use one account. it's so true. When I saw him commenting yesterday, I was like, it's the same guy, isn't it? Right? And I thought for a second I should just ban him. I don't know. I just what I'm not going to do is get embroiled into this once they start making this stupid arguments, right? See, I don't know if that's the case in Red Zone, but I'm pretty sure that Bullwinkle is. There's a guy that's been trying to troll this stream for a week or two now, and we've banned him several times. He just comes back and asks the same kind of dumb questions. And this thing that like you can't backtest certain strategies because discretion is involved is kind of a key one that they make. But I already laid the thing out to you, right? If it doesn't work on its own, but it does work with discretion, then what makes us think that setup has anything to do with the success of it and not the whatever is involved in discretion? So my contention is if you're really having success, so first of all, you'd have to have a large enough record of success for us to be able to prove that it's not just random. Okay. So again, if you come in and you're like successful for a year, 2 years, it's not enough. That can just be random. Okay. Unless there are certain properties of the success that are like really far beyond random, right? Like if you had a super high win rate and your winners were larger than your losers on average, then I would be like, okay, there might be something to that, because that goes well outside of the parameters that you would normally see, right? Like if you run my random strategy over a year worth of data, you're probably still going to come out with something that's wins less than 55% of the time, right? You have to get outside of that for it to, yeah. Okay. So first you'd have to have enough data for us to show that it's not actually random. But then again, at that point, who's to say that if you didn't have that set up at all and you just used the discretion part, that you'd still be profitable? Because like what's involved in discretion? Now all of a sudden you're bringing in all of the things that I say matter, like looking at the news and the sentiment and all of these other sorts of things that can actually be predictive of what the future flows are going to be. I think that there are some people that were successful. I really think this was the case with my mentor, where he had some periods of quite strong success. In fact, really, really crazy periods of success. And he thought that he was doing technical analysis. And every time that I tried to follow his technical analysis rules and everything, I found that he was always contradicting them because of discretion. And then it turned out that, oh my gosh, this guy knows so much more about this market itself, how the auctions work, what each of these economic numbers mean, all of this stuff. And he just kind of dismiss, it's not like he doesn't think that that's like a big part of his trading, but it was probably where all of his success came from, right? So how do you know that that's not what's happening? Anyways, I don't want to be like scorched earth. Anybody that I suspect of being this troll, I'm gonna go and ban them. But I'm not gonna get embroiled in these dumb arguments where people start to just say stupid nonsensical stuff, right? If he uses, well, sure. Well, you know, and it's not no matter what his arguments are. It's that he can't be sitting there undermining the stream and constantly taking things off the rails, right? Because nobody's going to want to watch if the whole stream is just me arguing with this one guy, right? Now, why does Red Zone keep retracting his messages? That's annoying. Before I'm done reading it. You seem to think that everything that is random, for that to be true, every trader would have the same results. But they pretty much do have the same results. 95% of them lose in the long run. No, it is the same dude. I don't know if Red Zone is Bullwinkle, but did he say something that kind of implied? I do kind of think that it is, because Red Zone comes in and he says something, and then immediately Bullwinkle is coming along and trying to defend him, right? Oh, hold on. I forgot to turn off the Bluetooth on my phone. Yeah, he's juggling, copying him, probably. No, I said if I rolled out a random strategy to a group of traders, after a year, 40% of them would be profitable. And when I say, like, I'd roll it out to them, the strategy would be random. So they wouldn't all take the same trades, right? They would each have a different seed. So each one of them would take different trades, but all of their trades would be random. Yeah, when I say discretion, I'm including fundamentals like news, price action is more of an entry point, maybe a tiny increase in probability. Yeah. No, I think I understand what you're saying, Red Zone, but so the question is still, what makes us think that the price action helps at all? No, the edge would not be the trade. How old are you, dude? One of the issues that I have, especially when I get on Reddit and I'm getting arguments from people that just seem particularly dumb to me, is like, am I arguing with a child, or are the other people in the trading community really this dumb? Talking about designing a trading platform earlier, I wish I was able to put up yesterday's volume profile or a composite on my trading ladder. Yeah, that's something we could add, totally. I think that if we made our own trading platform, that a DOM would be like the last part of it, right? Okay, then you tell me, why would 40% be profitable and the others aren't? Bullwinkle, I'm just describing a strategy run, right? Okay, let me show you again. I can come in here and I have this strategy. Like, it exists. I'm not just, this isn't just theoretical. The only thing that's theoretical is me putting it out and telling people that it's random. and not telling people that it's random. Okay. Random baselines, timed exits. What does it do? If it's the first bar of the session, so the very beginning of the session, it picks two random numbers. One number is the number of minutes after the start time. You define the start time so that you can tell it like only trade during the after the S&P 500 open or something like that, right? The number of minutes after the start time that you will enter into a trade. So it is essentially, it is picking a random time to take the trade, and then it is picking a random direction. Now, this random number generator takes in a seed. This takes in a seed. So that means if I run a back test over the past year of data and I click run, so I'm going to come over to here. Here I have back test, right? And then I'm going to do this on the S&P 500 on a 1 minute chart, right? And save history, and I run it. Oh wait, did I set the time? Or how far back did I go? I only went back to the beginning of this year. Let's go back to the beginning of last year. Okay. Okay. So this is now run it over a year. And it was profitable, by the way. Check it out. We made $34,000, guys. Isn't that great? Okay. It was random. Now, if I click run again, it's still 34,000. Why is that? Because the seed, where is that property? Where's the seed? Thought it was here at the top. Should be under parameters, I thought. Let's come back over here and look at the property itself. Ninja script property seed. It's like right there in front of my face and I'm just not seeing it. Reward factor, stop, use stops, after help, change size. What the heck? Oh, no, wait. I'm not doing the right thing. That's why. Random baselines, timed exit. Okay. The advanced base strategy is random too, but I digress. Okay. If I run this again, same results, right? If I change the seed to 1, now I get a different result, right? Okay, so now what I can do is I can do an optimization, and I can optimize over the seed and run the seed 1,000 times, right? So I'm saying if I gave this strategy to people, I added some little bit that picked a seed based on their computer's name or their NinjaTrader license or something like that, right? Actually, their NinjaTrader machine ID would actually maybe be a good candidate. Take a random number generator that could take in a string rather than just a number. Okay. Then each one of them would run the strategy. Would run it differently, right? Each person that was running the strategy, it would take different trades, but it would all be random, right? And what I'm saying is, okay, so now that we've done this, here's the one that after a year, here's the one that did the best after a year, okay? With me so far? Okay, so of those, how many of them were profitable? So what I can do is I can right click on this results up here, export, and that will allow me to export the results to an Excel spreadsheet. Okay. I can then come into RStudio and import those results. So here's what I've done. I did it where I did it 1,000 times over 1 year, and then I did it 1,000 times over 5 years. Graph them. Run. We'll make it big, zoom, so you can see. Okay. So what is it showing us? If you look at the blue line, this is the net profit of all of the different traders. So we had 1,000 traders that were trading randomly. They all did a different seed. 40% of them were profitable. Right, here's the 0 line right here. Okay. So on the right of this line, 40% of them are profitable. This little bump right here, see this bump right here? Oops. That bump. Those are the guys that blew out. It only gives it $10,000. So if it's more than, they lose more than $10,000, then it stops trading. Right? Okay. So there's a small percentage of guys that blew their account, and then there's this, people that, 40% of them lost money, 40% of them made money, and then 20% of them blew out or something like that. Okay. The black line is over 5 years, right? So the blue line is only 250 trades. The black line is over 1,000 trades. Now what do you get? Almost everybody has stopped out. Almost everybody has blown their account at this point. But believe it or not, there's still 20 to 30% that have been profitable over 5 years. Believe it or not. Okay. So, why are we pointing this out? You need a lot of data to prove that a strategy's success is better than random. Now, the better the results, maybe you need less data. Like the more edge there is, that kind of brings the amount of data that you need down. I wonder if you do the maths on it, is profitable to take advantage of the prop firms through randomness? What is the expected? Well, no, because, most of the people do still lose, right? Essentially, the whole prop firm business is we make money basically on all of these guys. And then there's enough of these guys out there that are able to go and claim success that they'll go out and tell everybody to come and, bring more customers in. Even though what all of them are doing is basically random. Do you see? Because my whole point was you can fool, well, people are really easily fooled by randomness, and you will get a lot of people that will try and trade a strategy even though the results of the strategy are essentially random. Here the results are literally random. It's literally a random number generator making the trades, right? But you might have some discretionary system, and the results that you get are no different. You were just lucky Just like you flipping a coin 100, you're going to have a couple of situations where you get heads a bunch of times in a row. You didn't answer the question, what separated the ones that blew out and the ones that didn't? The seed. You see, guys, am I crazy here? Or is this guy just really dumb? It's just... How was your mentor profitable who trades off of technical analysis? He knew a lot about the market. I don't know if he was always profitable. You are an idiot. Oh my OMG. No, you're an idiot. Are you listening to any of the stuff that I'm saying? Like, are you unable to take into account properly the context and what I said? What was on this chart? Okay, I didn't just draw these lines. Okay, this is real data that I generated from the market. How did I generate it? I created a random strategy, and I ran that random strategy 1,000 times with a different seed every time. So what's the difference between the ones that were profitable and the ones that weren't? The seed. Where are all the mystery men? What are you talking about? Yeah, it's a good book, man. You really want to understand the market, man, read this book. Let me word it a different way. Per your thesis, if the traders had unlimited money, after 1 million trades, they'd all be at the same P&L. So if they did 1 million trades, well, maybe not 1 million trades, but you're saying that as the number of trades approaches infinity, the number of profitable traders should drop to 0. Is that what you're saying? Right? Haven't you ever looked at Zero Hedge? What's the tagline on Zero Hedge? On a long enough timeline, the survival rate for everyone drops to 0. Yes. Over a large enough number of trades, you should eventually get to the point where everybody has failed. Because there's no actual edge. And if there is no actual edge, then your long-term expectancy is that you will blow the account. Right? The problem is that that's over a long enough time frame. And 1 year is not enough data. 1 year is 40% of people still think that they're winning. And we as humans, we're not able to see large enough numbers to think about that, right? You took the IB break? I tell you what, the action here in the treasuries have been unusually random today, but that last move down looked pretty good. take O out of the equation, allow loss as a negative. If the randomness was real, they'd all be near the... Sorry, what do you mean take O out of the equation? Are you saying the guys that blow out? So if you don't blow out, take 0 out of the equation. And 0 is right here, right? So what it's saying is, if you lose, if your P&L ever goes below 10,000, then it stops trading, right? That's like the starting amount of money in the account. Right? If you take that out and you allow it to just trade forever, then over a large enough time frame, this distribution still holds. I mean, you're always going to have a distribution, so it's not going to consolidate into a single value. Right? Probability doesn't work that way. There's always going to be a variance, right? And this 0 is kind of just like the expected value. It's in the middle of it. It's the average, right? Okay. Trudeau is saying that they are in the process of possibly delaying their next set of retaliatory tariffs. The S&P 500 is rising off of that. Treasuries have been going down. I think that we're still early enough. I haven't seen a ton of volume come out in the treasuries. I am seeing really strong move in ES, but it's worth a shot. Start with 1 million and allow the loss. Yeah, I'll allow them to go below 1 million. Even if they had all lost, they'd have lost about the same. No, I would still follow a distribution. Uh-huh. Okay, so they're saying that they're hoping that are they saying April? That by April, that they will have shown the U.S. that they've done enough to try and deal with the fentanyl issue. And then the only issue at that point is the retaliatory tariffs. Because both Mexico and Canada have had tariffs on the U.S. for quite some time. So if they were to cancel then all tariffs would be canceled, and we would all be in a better spot at that point. So that's what I'm hearing right now on this squad. Okay, using the above, all would lose. Some would have much greater losses. And my question remains why? Because that's the way that a probability distribution works, right? So you're going to have these outliers. What are you getting at? What do you think the answer to your question is? Why don't you just go do it and come back with the result? Canada Prime Minister says call with Trump on Wednesday was colorful, very substantive. He and Trump are committed to continue to work together constructively. Canada says it will continue to be in a trade war that was launched by the United States for the foreseeable future. As long as there are tariffs on us from the United States that are completely unjustified, we will be responding strongly. We're in discussions on possibly delaying a second wave of our planned tariffs. I think, no, Bullwinkle, you're not listening. You're not listening. There's no discretion involved here. The robot does everything for you. The robot does everything for you so that you think, I tell you, right? Let's go back through the scenario that we drew up here. I take this strategy. I add something that generates a seed that will be unique to every user based on their machine or their NinjaTrader license or something like that. Right? But I put it into a DLL so that they can't see what it's doing. And then I tell them, I passed the combine with this. You should try this strategy. It's super great. Right? And then they trade it for a year. After a year, 40% of those people would be profitable on average. No discretion involved. They're just running the strategy every day. They don't know what it's actually doing. The computer is making all of the decisions for them, and it is random, right? After a year, 40% of them will be profitable, and that 40% of people will go out and say, oh, this strategy is absolutely amazing. Yeah, I passed the combine from it too. Even though the strategy was actually truly random. You understand? Bullwinkle, no offense, dude, but you're saying low IQ things. So I just set up a hypothetical situation for you, and you can't seem to understand that it's a hypothetical situation. That is a symptom of being like in the, below 90 IQ. People that are under 90 in IQ have difficulty dealing with hypothetical situations. You can't see the ridiculousness in what you just did. Why do you think I just drew up that whole situation for you? To show you, to explain that people are not capable of differentiating a random strategy from real edge. No. That's not what I did. I used the bot to show you that you have to have a lot of data in order to verify that there's actually edge in a strategy. That's what I did. You can't come in and trade for a year or two and say, oh, I made money. That must mean the strategy works. Because I can go and I can do a completely random strategy, and 40% of the time it will come out profitable after that many trades. 40%! That's actually really high. It's kind of crazy to think about it as 40% when you've got retail traders perform much worse than that, right? How long would it be profitable? What was the time period? So if it's a year, 40% of are profitable. After 5 years, or you could do it by the number of trades. So after 1,250 trades, then it's more around 30% that are profitable. So that's kind of interesting, isn't it? Because I've never been able to find a retail trader that has a 5-year history. But the stats kind of suggest that even if you were trading randomly, that there should be like 30% of people that even last that long. It's a little startling to me. In other words, retail traders perform worse than random. Okay, but which addresses the fact that no discretionary trader would use the same strategy for 5 years without tweaking as the market changes. Okay. But that was not the point. The point was, how do you, if you have a discretionary trader and they're trading for 5 years, how do you prove that their results are actually better than random? Yeah, you blow it and then you just go again until you're in that 40. Sure. I mean, that's how the combines work, right? Is these guys, they'll go and they'll do the combine. So let me tell you something. Here again, when you look at like what is the profit target compared to the stop loss or the maximum drawdown that you get, there's a 1 in 3 chance that you'll pass the combine if it's just random. If it's just random. So if you've done the combine like 4 times and you haven't passed it, you're doing worse than random, right? Yeah, that just flash the book in their face because they obviously don't want to learn. I'm not sure if Red Zone is actually a second account or not. Okay. If your proof requires a 5-year test, then it can't be proven. Yes. It can, depending on the results. Okay, that's the thing that you have to understand. So if I came out and after 5 years I had a 60% win rate and my average loser was 2 times my average winner and my Sharpe ratio was above 1 and you had 5 years of data, there's almost certainly some edge to it. Okay. But if you come out and your average winner and your average loser are about the same and you've won like 55% of the time, then that's still within the range of random. So it's the result, right? You have to have a result that is outside of the margin of error. Right? Well, I tell you what, they sure dragged their feet with that, but the pressure really came out there in the end, didn't it? Man. What is the magic behind 5 years of market change well within that time frame? Well, that's a good question, right? Because could certainly be the case that, like, if you have a strategy and it really only works in this one market, and it's only like a 1 year of market where it's like that, and you don't take enough trades within that time period to be able to show something outside of the margin of error, then you really just can't know if the success during that time was because there was a real edge or because it was random. There's no way to know. But let me tell you something. If it's a strategy that like only works in this 1 year or 6 month time period or something like that, it's a shit strategy anyways. A really good strategy, the kind of strategy that you really want to be looking for, is going to be one that's based on some sort of structural inefficiency in the market, right? Something that's based on the market microstructure. And so it should always be there. You might not be fast enough to catch it all the time, but it should always exist if it's based on the market microstructure. Whereas if it lasts for only a year, maybe it was because some participant that was really big in the market that liked to do that thing, or it could be random. Either way, at the end of that 1 year, you are stuck with not having a strategy that works, right? So, and how do you know when it stopped working? Are you gonna blow the account first before you figure out that it stopped working and change? You know, there's that issue too. But okay, that's kind of some odd stacking there at 15 and 15.5. There's nothing wrong with a 1 or a 2 year run. Well, what is wrong is to have a 1 or a 2 year run and then go out and tell everybody that this is a working strategy when you don't know that. That's how you end up with millions of clueless retail day traders all sharing the same information that has basically been empirically proven to not work. Lutnick is speaking, so be careful. Because remember, the whole reason that this whole thing started was you guys were saying, well, I think that price action does work. You just have to add discretion to it. And that's why I said, well, but that makes no sense, because how do you know that the profit didn't just come from the discretion side and that the price action didn't have anything to do with the results at all? Do you think closing music? Well, okay. Like, I'm not saying that the market doesn't change, but I am saying that there is a real limitation to like what we can prove about the market because of the statistics of it, right? You have no, you know, if it's something that only lasted for a year, if only lasted over 250 trades, then there's really no way for us to know if it was random or there was really something to it. So I'm struggling a little bit here because I did see a lot of volume come out, but it's such a slippery market. I might have a really hard time detecting the exit signal here. I put an order down at 10.5 because that was the overnight session low. Although I don't know where I got that from because that was not the overnight session low. The overnight session low was 12.5. I think I just kind of misread it. That's why I asked about 5 years. Well, it's just has to do with the number of trades that you're going to take in a year, right? The real determiner is how many trades you take, right? So if you have a strategy and you trade it for 1 year, but in that 1 year you took 10,000 trades, of course, it still depends on the results that come out, but you stand a very good chance of being able to prove something beyond the margin of error in that case, because you have so many samples in a year, right? The random strategy that we were talking about only takes 1 trade per day. Oh, I see why it's at 10.5 now. Okay. The London, yeah. Now I'm seeing that iceberg there, so. Okay, but what is your point about that? You're missing the point, right? Did I say that people can't have a good run? No, what I said is there's actually going to be a lot of people that are going to have a quote unquote good run, even though there's no actual efficacy to their strategy, right? What I said is having a good run doesn't necessarily prove that a strategy works. That's what I said. That's why all of the people that talk about price action and, you know, why they believe that price action works, they're only ever able to say, well, I know this one guy and he had a good run with it. Because it doesn't actually work. What they're doing is just random. And there's just enough of them had enough success with it to fool everybody else into thinking that it works. Well, I'm really mad that I didn't get filled at 13.5. Once your monthly R? Oh, I don't know right now. We don't taking very many trades. So I don't think that now is a very good measure. Normally, when we're in a good month, we make between 50 and 100 on the micros. No, we haven't come to an agreement. What you're doing, Bullwinkle, is you are trying to move the goalposts. What was the argument? The argument was there is no efficacy to price action. And unless you're saying, oh, you're right, price action doesn't work, then we don't have an agreement. You've only just come to an agreement on, oh, okay, I actually understand how statistics and the backtest and everything that you're presenting works and what is necessary to be able to prove something beyond the margin of error. Okay, cool. So now that we've done that, now we come back to, okay, and we have never been able to show that price action is effective outside of that margin of error. Yeah. But we go. I really think you're missing a lot. Maybe you're just ADHD, man. Do you have ADHD or autism? Yeah, you did never mention how you trade. We're not talking about you. Red Zone is the one that started this whole thing. Red Zone was the one that said, well, you say that price action doesn't work, and I say, well, because you have to have the discretion, right?
Block
so now,
guy.
Oh man, I did not like the way that turned out. So there was a really, really huge buy, a bid at 15.5, and it looks like they just slammed up into 16. So we'll see if that coming out maybe helps it come back down. I don't know. But that does kind of mean that I should have been more, like when it was down at 13, I should have just hit into 13.5. I think order flow requires discretion. Well, so no, but maybe what you mean to say is, in order to get worthwhile profits from order flow, it requires discretion. Right? Like there is an edge there in the order flow that we can prove empirically. But the problem is that those setups that we can prove empirically are setups that we as a retail trader are not fast enough to capture, right? So what it is it's that we're saying that A being order flow, A equals 0.2. So what I would say is the edge in order flow. And in order for, and then B is like 0.8. And then A plus B equals 1. And in order for it to be, in order for a retail trader to really make money, when you consider like the fees and all of that sort of stuff, it has to be over 1. Right? But when we go and we back test and we try and produce empirical evidence about price action stuff, I just get 0. What's the win rate for what? For like order flow setups? So some of these market making strategies that rely on order flow, you want to have like an equal risk reward, and you can, if you're really doing it correctly, you can get like 70% win rate. 70% win rate on equal risk reward, and maybe 20% scratch. You might do less than that. You might be like 50% win rate, 30-40% scratch or something like that. But yeah. And how often do they appear? Some of these all over the place. Some of these a lot. You know, I think the thing that's really interesting about a lot of order flow setups is that when you describe how they work, it's really clear that there absolutely is an edge in it. You know, like there's some things where it's like, if I buy in this situation and yada 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 yada, and then does that result in a profitable trade? And the answer becomes, well, maybe we have to test it and see, right? But some of these, it's like, it's very, very clear that it works. And it's just kind of a question of, can you pull it off, right? So like, I think that the best example of that is catching the edge, right? There is an explicit edge in catching the edge. If I want to buy it, and I can buy it just as all of the offers are being taken out, so that once I am into the position, I immediately have a bid behind me so that I can scratch it if I need to. That improves things. It's a teeny tiny little bit, but it basically takes it basically takes the spread out of the equation, right? So there is absolutely an edge in that. Can you use prop firm capital? So prop firms have kind of been doing things to prevent you from using strategies like that, because their simulators don't simulate the queue correctly. So you can actually exploit the prop firm using those kinds of things. So what you would do explicitly is this: is every time that it ticks up or down. So the opposite of the catching the edge is what we call the crocodile. So the crocodile is, if it ticks down, or it just ticked up right there, there's 17,000 or 1,700 contracts at 14 now. You want to be one of those bids that just stacked there, right? And then if it gets too low, you cancel your order, right? Okay, so now I have a good spot. Now I'm like always 1,000 in line. What I can do, and I might have those all over the place, right? And then I wait for, prices coming back the other way. What do? I catch the edge. I have a good spot in line. So that's what you do. And when you do that with the prop firms, if like price moves away and comes back, for some reason, their simulator thinks that you're always at the front of the line, even though you're probably 1,000 in line. So that's why they kind of changed their rules and what instruments you could trade, so that you can't really take advantage of that. So you got talking about catching. Well, I say that if you're manually trading, you should still try and catch the edge when you do your entries. But if you were really going to try and like make money just off of that, you would have to be a robot. You would. But that's why I said these are some things that, like, when you see the logic of it, it's very clear from the market microstructure that is an edge. It's a tiny edge, but that is an edge. But just because there's an edge there doesn't mean that you are the one that's able to take advantage of it, right? Because it's competitive and it's going to be speed-based, right? So the only the fastest 1,000 traders or whatever are able to do it. So if you make a robot like that, then you will want to avoid it trading during noise or choppy markets, yeah. Well, so then this is where, like, you're going to add that edge with a bunch of other edges that you can prove, right? Like, maybe I have something that is able to predict with a high degree of accuracy what the trend is going to be. So I can play the edge, but now I know what direction to go, right? So that's something that I can add on top of it. I can be doing alligators all over the place so that I do actually have a good order for where I want to take my exit. right? Two things I'll never say is how I trade, or I'll tell people that their method does not work all day long, man. like if we have good data on it, because what we have in the trading community is 90% of people running around saying all of this shit about, this is a profitable trader. That's not true. Oh, I did not answer. Do you think levels have an effect on the market? So there can be levels that have an effect on the market. But like some level that's like consistently proven to have an effect on the market, no. Or which is to say, I'm not sure that there is a level that affects the market because of market microstructure, right? And so when you get into those sorts of things, by the way, I need to cancel that. I think that I just leave this for the next 15 minutes now. Okay, so like, does the day's high or low matter, for instance, right? Well, if you go and you do a back test and you say, okay, every time that it's been more than an hour and then we end up breaking a new high, and it's going to continue through in that situation, right? And I go and I back test it, and let's just ignore what it would actually say right now. Well, let's just say that comes out that most of the time it does, that most of the time it continues through, right? Well, as soon as you see that and you start trading on that, it starts to have an effect on the market, right? Other people are seeing that price. And so like the market changes, and the way that the market tends to change is that it just turns it into a mess in those areas. So something that I have seen shown is that if you come up to a key level, there's not a way to predict these key levels very consistently, I don't think, but that you will tend to see people taking profits before the level, and you'll see people having their stops hit after the level on average. And apparently that's something that has been proven. That's one, like what they've proven about that. That's one that kind of is another one of those that kind of helps you with an exit, but it doesn't help you with an entry, Oh, sorry, I did not get your point about this. How would you identify noisy or chop up markets automatically so a robot won't trade during those times? Good. Okay, so a couple of things that I'm going to look at. Number one is the amount of liquidity that I see on the DOM. So if the liquidity is unusually low, I don't want to mess with that. Yeah, I think I should take the other contract off. It wasn't a bad trade. That was so weird how it took so long for it to come through. But anyways, so like we had earlier in the day, there was not, there was like way too many prices that were below 2,000 lots in liquidity. So that's a big red flag to me that it's going to be a slippery market. Okay. Another one that I look at, and you'll have to have my indicators to do this, but I have an inventory cost basis, which basically just shows you the difference between a theoretical long-only market maker and a theoretical short-only market maker. And if they were taking all of the fills in the market, where would their average position be? And the wider that this is, like over here, it's pretty tight, but then you get over to here and it's wider. Then you're going to have a more noisy market. Okay. But I think that the bigger thing I think that the bigger thing is that the bigger thing is that you kind of want to predict the orders, right? So if you have, that, like in this instance, the trade that I took, it was based off of Justin Trudeau's comments, right? So now I have a piece of information that I think is going to predict what the future orders are going to be, that there's going to be more people selling treasuries, right? So I'm not going to trade unless I have a piece of information that says that we're going to have an imbalance, right? And so that's going to keep me out of chop overall. And then a split side of that is there is kind of an opposite situation where you kind of can know that the market is going to be unusually choppy. And that is there are not a whole lot of things going on that day that are going to drive new orders to come into the market. And especially if you have something tomorrow that's really, really big, like a non-farms payroll, for instance, then you can pretty well expect that the market's going to be super choppy, right? Okay, so there's empirical evidence that price action is real? No, because the idea that if there's a level, and actually apparently the best setup for this is an even number, by the way, okay? So let's use that as an example. Like 110 even. Donald Trump is tweeting again that Justin Trudeau is trying to use the tariff issue to remain prime minister. Okay, so if we have a key level, then the thing that I think has been proven, and I'd have to pull out the study here again to get. Actually, do I have it? I thought I saved it. I thought I saved it and then I didn't come back to it. Did I? I saved it somewhere. I saved it somewhere. Maybe not. Did I save it? I thought I saved it somewhere. So I had come across the word to like search for it. Okay, but you have this key level. The thing that they think has been proven is that there tends to be more liquidity profit taking ahead of it, and then after it there tends to be more stops. Okay, so I don't think that proves price action, but now you have to define like what actually is price action, right? Because that's not like really a setup that they use in price action anyways. But like again, a lot of price action is like, oh, I'm going to see it come into a level, and then based on what it does in that level, I can decide whether it's going to bounce or it's going to go down, right? And that's nonsense. Like basically what happens in here ends up being chaos. That's why, like, it seems to me that it ends up being something that can kind of help you take exits, but it doesn't provide entry signals for you. What about providing a, well, I actually have all of those individual components are all things that you can kind of see, right? So one thing is that I have Alice. Alice is a good measure of how much opportunity there actually is in the market. Okay. It's kind of showing though that there's not as much opportunity in the market today for some reason. Seems a little low. It's like when it's below 2000 is when it's like, don't touch it. Okay. So it's gotten pretty quiet in ES again. Then there is in the inventory cost basis, the difference between these two lines, which there is something in the companion that shows you that, by the way. There's like a spread. Okay. The level 2. So you come in over here to this. You can see the resting orders. And inside of the resting orders, this is like a difference data series. But if you dig into this, you'll find that there is like a max bid max asks, right? So if you come in here and you say, you know, the bids is above or below a certain amount, right? And that would be another one. So you could write an algorithm that contains each of those individual elements, except for the last part that I talked about, which is I think the most important, which is like, you know, what things do I know about today that might be driving flows, or that might suggest that there's not going to be a whole lot of flows today. And that could be systematized, but not with the information technology that I have available. The market is perfectly efficient until there's chaos. Discretion is used at that. But okay, so I don't think that the idea that you're going to see more volatility more volume and movement in a particular area necessarily provides you a trade. I think that you're taking like a very, very limited thing that we know and like extending it way further than what it actually tells us. I think it was when I was searching about round numbers. I think it was a study that showed that there was more limit orders and stop orders after large round numbers. You track volatility price movement on big news days. Well, yeah, if you're going to look at it overall, you're going to see like, well, I mean, I think volatility on news days should, like Friday, you should see that there is more volatility on non-farms days than other days, right? But that doesn't necessarily predict which way it's going to go, does it? No, so you have to be way more complicated than that. So it's kind of, you know, there's some things there where it's like what you can prove is kind of limited. And then, okay, so like in health, we run into this problem all the time where it's like, okay, we find that your body absorbs more creatine if you take it immediately before or after your exercise. Okay. But does that mean that if you take the creatine immediately before or after your exercise, that will improve your performance? And then we kind of have a hard time proving that particular thing because there's too much variability between individual people to prove it, right? So in discretionary trading, we can prove, for instance, that a certain thing predicts future orders, right? Does that mean that incorporating that into your strategy and everything is going to make you a profitable trader or whatever the deal is? Well, not necessarily, right? because there's way too much that's up to you. My assertion, though, would be that you have a much higher chance of being successful if the things that you are basing your trading off of are real things that are proven, than just going off of things that people seem to think work but have never been proven. Because the bigger issue and the thing that really kind of kills all of this stuff is that prices are martingales. That the best prediction for the future price is the current price, and you can't really get away from that. And this thing that like there's more take profits and stops around round numbers, for instance, doesn't change that martingale statistic. So more broadly, any strategy that is primarily about trying to interpret changes in price and comparing them to past changes in price is probably not going to work. And if you were able to show something, if you were able to perform using only that on intraday bars in a way that was outside of the margin of error, you could probably win a Nobel Prize. Okay, I have a different idea to identify chaos. You place a simulation order every bar and track the take profit or stop loss would have hit. And what would that show exactly? Because I can tell you exactly how that's going to work. The percentage chance that you win will be equal to 1 over 1 plus R, where R is equal to the target over the stop. I can almost guarantee it. It would show a win-loss ratio in that can, but all you're doing is you're just creating another measure of volatility that would tell you the same thing as range. If you were to say the target and the stop are always the same, then all this is telling you is whether the range is over a certain amount. I think you're still kind of to this thing, though, going back to the conversation that, like, you want to prove that there's something in the price history that can help you predict the future price over some short time frame, right? And we're not able to prove anything like that. We're not able to show anything outside of the margin of error. And what I see is just like a bunch of bargaining now, right? Instead of going, okay, like, people have looked into this. It seems that price is very statistically efficient. there are people that have made money in markets. Let's go and look at how they've actually made money in markets. Nah, there really is not proof though, Red Zone. I mean, that thing that I just talked about there is not something that's showing you that changes the randomness of the market. It's something about the orders there and not necessarily about how price is going to move around there. Earlier, someone pointed out a price run. Yeah. Well, like, I said that there are situations where price and cumulative delta aren't correlated, and that they're actually not nearly as correlated as you think that they are, and that really the trades that you want to be going for are when they are correlated, but that you're still going to get decent moves when they're not. It's just those aren't necessarily ones that are very predictable. If the probability is low, then the noise is too high for you. Well, that's what Alice tells you, that dude. Just look at Alice. That's what it's telling you. And Alice is doing it in a way that quantifies to you how much volume could actually trade on a particular edge at that time. But like the thing here is, again, like what you're seeing in a 1 minute price chart is mostly noise, and nobody's ever been able to show that there's enough informational content within price to make a profitable strategy, right? So I think that there's enough evidence here at this point to say that if you want to have a profitable strategy, you have to work around that particular problem, which basically means adding data, right? Okay. Order flow is some data. Order flow has adds some amount of edge. Now look at every little piece of information that you can pull from outside of the market and add that in. There you go, right? Now, price isn't useless because you still kind of have to use price together with all of those other things to prove something, right? I don't think that you... What proof? What source of proof am I ignoring that you've proven? It's time for me to get going. Maybe you think that you're posting a link, but if you're posting links, those are all shadow banned. So I wouldn't be able to see it. YouTube, this serious... Okay. I'll go and I'll look, and we'll see if he has enough empirical evidence for something. One thing that I think a big mistake that people make is the time frame, right? Like if you back test on higher time frames, then there's things that we can talk about, right? But 1 minute chart, okay, we'll see. I'll look. I gotta get going though. I'm gonna go skiing. See you tomorrow. Stay excellent, team. Oh yeah, it's non-farms tomorrow, so you definitely don't want to miss that. But I'm happy with the chart. I wish that I hadn't taken the YOLO gamble that I did yesterday. But that one that I took today was pretty good. It was interesting because it was like it took forever and then it went, but it makes me feel better about not getting that job. At least temporarily. I'm babbling. Stay excellent.